There are two types of candlesticks. We have bullish candlesticks that give us a move up, and bearish candlesticks that give us a move down. A candlestick can be broken into four parts: our high, low, open, and close. If the close is below the open, that's a bearish candle. If the close is above the open, that's a bullish candle. We also have our wicks that give us our high and low, and the body of the candle, which is price action between open and close. A candlestick can be broken down into any time frame, from 1 second to a year or more even. In this case, each one of these candles is a month. For example, this is January, February, and we're taking a look at all of the price action in March, just in this single candle. The high of March was around 9.2 thousand. The low of March was about 3.8 thousand. March 1st opened up at 8.5 thousand, and the month closed at about 6.4 thousand. Candlesticks are very useful, much more than line charts, because they show you the high, low, open, and close at a glance. For example, in this case, we can see all of that information for March just by looking at this one candle. It also shows you the degree of emotion in the market. For example, the size of this candle just for March shows that there was a lot more emotion in trading than February and January before it. Price opened here, had a move up, before then moving all the way down here and going back up to close here. We can see all of that information just by looking at this one candle. And lastly, the candlesticks can form patterns to determine future price action, whether it be engulfing patterns, evening stars, trend lines, channels, or triangles and wedges, all of which we'll cover in future tutorials.